Good afternoon and welcome to the University of the Highlands and Islands. For those that haven't been here before, my name is Gary I. Campbell. I'm the Key Account Director. My job here is for the whole of the university, which goes, if you take a line actually, we were talking about it earlier, from the southernmost tip of Greenland to the northernmost tip of the Republic of Ireland, UHI fits right into that gap. We go from Munster in the north, the south end in Campbelltown, near Campbelltown in the south. It's a vast area. And my job in this area is to do employer engagement and speak to people like yourselves, those out with the student population who might be able to work with us, do things for us, or more importantly, we might be able to do things for yourselves. And as part of that, we have a series of these business lunches, as we call them. We've been doing them for a while now. And this particular series, we're delighted to be sponsored by the Royal Bank of Scotland. And today, I'd like to welcome along a panel of experts on alternative methods of funding. And what we're going to look at with Al Wilson here, who's from the bank, about what the bank now looks for in terms of funding, how they'll fund a business. We've got Andy Coleman, who is a peer-to-peer specialist, but has also raised money through peer-to-peer lending and crowdfunding, but has also advises others on it as well. And last but not least, we've got Rob Hamilton of Dynamic Edge, an IT company that's based in Aberdeen, but has recently opened up in Inverness and is covering this area as well. And Rob's company raised some money by going to crowdfunding, but interestingly enough didn't go to the bank first. So we've got a real mix here, and of course after we've gone through a bit of a chat with them, we'll open it up to some questions for yourselves. I'm sure you've got some questions about how you go about it, what you can do, and how you can learn from these gents. So without any further ado, Al, from the bank's perspective, I suppose a few years ago people went to the bank, they got the money, things weren't a problem. Then we had the wee thing called the financial crisis, and the world thinks now that the banks aren't lending, which I'm sure probably isn't true. But what's causing that perception?
I think perception would be hopefully the right way to put it. I think, Gary, you're absolutely right when you said there. So 2008, I guess the world did fall apart, and we kind of hold our hands up for the part that the banking and financial system played in that. However, things have moved on, and as a bank and banks in general, have money to lend. But I guess the difference now is that we have a significant duty of care in how we safely put that money out the door. My own personal background, I've looked after businesses and been involved in how we lend money to businesses for the best part of the last 25 years. So I've kind of seen it from, I guess, peaks and troughs, if you like. And I have a kind of fairly simple attitude to how we get money out the door safely. And it's kind of round about saying, okay, four kind of key components. So what are the people like? What kind of experience do they have? Can they deliver what they say they're going to do? What are they putting into their own business? We talked earlier about you need to have some skin in the game, because if you cut the days of 100 or 100% plus lending, as we had a kind of little giggle about, are really very much in the past. How are they going to pay it back? The viability of the business. And the last bit that we kind of look at is, okay, so if it doesn't all go well, what's the plan B? Is there some kind of asset there which will allow the bank to say, okay, so it's not going as well as we all hoped, so how do we get the money back and how do we get it safely? But that's a kind of not an afterthought. It's important, but the biggest bit for me is, do we like the people? Do we like what they've got to say? Do we believe they can deliver it? Is what they say they're going to deliver viable? And have they backed it themselves?
Mm-hmm. I suppose, which makes sense, I suppose, that if you're not going to believe in your own business, then why should anyone else?
Absolutely.
I like your duty of care, because we've got an audience here of your shareholders, effectively, haven't we? When you look at it that way.
Aye. I'm not paying dividends today, just in case anybody was interested. So.
No, Andy, I mean, from your perspective, back in 2011, saying that probably the darkest days of the financial crisis, you were looking for money for a business, and I think you went to the bank first, didn't you?
That's right, yes. So I've been aware of Peertopeer since Zopa, which was the first one, invented the idea pretty much. It's a British invention, which is a good story in itself, 2005, but I didn't do anything with it. And then I had a software business doing very well, and we were looking for money to expand. We were growing, and we had a classic problem with small business growing. We had cash flow issues, we had long contracts, we didn't get paid to the end, getting sleepless nights, worried about payroll, and that's a very familiar story, and people in the room will know this. And we went to our bank. We went then through all the banks in the dark days of 2011, early 2011, and we just got nowhere. To the point where, a friendly bank manager took me aside and said, look, we're just not lending. We might be saying we are, but really we're not. It's just too much going on.
I'm sure things have changed.
Yeah, things have changed. No, and this is it. It's the opposite from my point of view. I think things have changed, and hopefully my answers later will, explain that. So it was very difficult. We were really struggling. Even our own bank wouldn't help us out. And a leaflet fell out of a business magazine, which was Funding Circle. And I think I just put it in the folder of, things to do and left it. But then having had this problem, it's almost 6 months of work, getting nowhere. And people who've done through it know how much work there is in applying for a loan in the bank. I gave these guys a ring and thought, well, I'll give that a try. It was a welcome sort of, last resort almost. And I went from a phone call to money in 12 days.
Wow. After 6 months,
yeah, literally.
With all the
so that was a sort of transformational experience for me in the business. We got our money, that gave us that working cash for a year. We went through another one after that. And it was that piqued my interest and has got me into pretty much a full-time life now of looking at analysing and working with peer-to-peer. And I should actually declaration is I've actually invested in peer-to-peer. And so it's a full disclosure. I'm a fan. I've actually put my own money at risk. So just so everyone knows that.
Well, that's a point, because I think we'll come back to that later as what's in it for the investor. Because, we've got the bank. It's the bank, it's its money, and it raises money in various different ways.
And shareholder, as you pointed out.
And we're all shareholders. But then there is the peer-to-peer is peer-to-peer, and I think a lot of people, you're right, a lot of people forget that there is the first bit of the peer, which is the folk who are putting the money in. And then, yourself, Rob, from as a businessman, then you've just recently raised quite a bit of money, by peer-to-peer lending. And what was the process with that? Did you go to the banks first, or did you, and how did you find it?
I didn't. I started the business. That was a true startup back in 2009, and we're fortunate enough to have organic growth of between 20 and 40% year on year since I started it. But my business partner and I decided in late 2013 we wanted to kind of take it up a tier and expand that growth quicker. So we figured a way to do it was to get some cash into the business and be able to get key management in place to allow us to do that. We didn't go to the bank. We did have an overdraft with the bank, but that was just a safety net for us, really. But an associate of mine suggested he'd get money from Funding Circle, and this was maybe an opportunity to kind of look at that avenue. Basically filled in within an hour the forms online, submitted the questions and so forth, and left it there. And we were fully funded with it inside a month anyway, with a few questions to answer and that. Now, we had a reasonably strong balance sheet, which would show growth over 5 years. So with those boxes ticked, we assumed it was quite easy, but the whole process to us was very seamless. Yeah.
Very seamless.
Yeah.
Because I think that the interesting thing is here, there's 6 months, and then people talk. There's maybe a bit of fear and trepidation now if someone goes to their bank manager. As maybe a new business, it's compared to this, you do it online, and I think it's fair to say and just make it clear that not everybody raises all the money they want, via peer-to-peer lending. But so from your perspective as the bank, now with this having, I suppose it's something that was maybe always there unofficially or informally, peer-to-peer lending. But since the financial crisis in 2008, it's moved into the mainstream. Do you now work with, or do you see that as part of a package that people can do?
Yeah, so it's a really good question, Gary. So what we do have is we have a number of partnerships that we work with, and Funding Circle is one of those partnerships where if we can't necessarily support what the customer would like to do, then we have a referral business where we can either refer them to a couple of peer-to-peer lenders, or also there's a business called Development Strathclyde Limited, who we also work with, who we can refer business to. It's non-advice. It's simply, naturally we would like to do the business in the first place if we can do the business. And interestingly, when you've talked about the length of time it takes there, that's one of the key components of what we're trying to do differently in terms of how we get to a decision point much more quickly, and it's something that I'm kind of personally working on with in a kind of project just now to make sure that the customer experience is greatly enhanced on where we are just now, and we recognise that. So, but the original question, yes, we cast the net much wider now in terms of how we can hopefully have a more cohesive approach to a package of funding, as opposed to simply it's kind of this way or the highway.
So taking that forward, Andy, you work, we've heard how you raise money and got you an interest in it. You now work, in this area, advising people in peer-to-peer lending. And I know that, I mean, just as I mentioned just now, one of our local businesses here, City Financial, both Rob and Andy have come through, Hamish, who does a similar role in this part of the world, and Hamish is with us today, that if, so somebody, comes from the bank and maybe come to yourself, what would you look to do with them at that point? And in terms of giving them advice on how to take it forward. I mean, maybe someone's come a bit scarred, and the bank they've dealt with all their lives, their mum and their dad, they've had their mortgage and maybe it said no, and I'm not saying it's the RBS, by the way. It's, maybe they're a bit scarred. What's the process? What would they do now?
Oh, that's a good question. I think the main way that people find themselves to Funding Circle has changed. You heard from my story where it was a traditional print advert that I ignored at first, whereas I went straight to the Funding Circles. The network of understanding and these sort of events are growing. So people are taking themselves directly to these lenders, and they are starting to advertise. You'll start to see, maybe you've seen Wellesley and Funding Circle advertising on television now, so you're starting to see that happening, more traditional print. People like the IFAs and advisors like Hamish and other organisations are getting very good at not only referring you but helping you in the process. Because some people aren't happy to go alone, and accountants and IFAs will make the applications for you if you wish, so if you're nervous or scarred. So I'm not an IFA and I don't want to become a broker. I want to maintain my independence. So I would just send them someone like Hamish or whoever locally is around. And interestingly, I think there needs to be more work to network. I mean, Hamish has done a fabulous job up here of sort of bringing everyone together. And it might be easier in Inverness than it is maybe in the Central Belt or down south in England. But I think there's more work to be done. The good news is, if I may, is that the industry publishes a lot more data and is more transparent than you may have found when you dealt with banks. I mean, you can actually go and find the loan books of the lenders. You can go and find out their typical rates. You can look at the people who are there. So my advice, which I know you come into later, but right up now will be to encourage people, even if they're not sure, just to register and look. There's no cost or risk to having professional lurking on the site. I recommend some lurking. And where you wouldn't have found Royal Banks sharing their loan book with you, but you literally can look at entire loan portfolios, who is borrowing at what rates, how long it took them, and that's a very useful exercise. So that's what I advise people to do is maybe talk to their broker or their accountant, their advisor, but actually go and find out for yourself. It's not scary, it's not difficult. Maybe we heal those scars, a bit of therapy to remove that fear and uncertainty. I think it's one of the things that peer-to-peer has about it, is it isn't necessarily scary or dangerous initially, just to find out more. It's not something that particularly conflicts with the bank. It's a different process. There's room for both.
And I think, Rob, you said that within a month you were fully funded.
Yes.
What was involved in that? Was there a lot of form filling? Did you have to meet people, or was it as straightforward as, I put my thing on and a month later I've got my money?
As I said, inside an hour really to fill in the form and details about the business as well, and put up the last 2 years of accounts in there and a bit about why you want the capital and what it's for and so on. It's submitted via that form there, and then a representative will get back to you and there's something signed at that point that presents it on the Funding Circle website. And one of the key things as well, I think, to more traditional lending is it's maybe not one or two people making the decision on paying that money out. There's hundreds of thousands of potential investors in there that are deciding yes or no in that. So I think the funnel's a lot bigger in respect to that. But during the process, once it's posted in there, that's publicly available, you do get a number of questions relating to it. Some are particularly plausible and answerable, some are a bit odd, strangely enough, but you can get around that, and as long as you stay on top of it and answer those questions responsibly, it was no problem at all, to be honest.
And in terms of the cost of the money, the interest rates at the moment are almost zero. They talk about it. The bank lending, if you borrow from the bank, it's quite low. If you get a mortgage, is it? Do you find it a little bit more expensive?
In hindsight, it's. We borrowed about 7 or 8% on average across the board, which was adequate. But recently, we took funding for acquisition direct from our bank, and we were down at the 2% mark. So, from that perspective, I'd always recommend you try the bank first because the interest rates are far lower. But as an alternative method, I think Funding Circle or an alternative crowdfunding platform is as good as that.
Yeah, I'd agree with that.
And Andy, something you mentioned a minute ago, if somebody's got some money, we're just talking about interest rates being very low, and I think it's a common complaint, especially amongst those who have saved up, maybe pensioners, they're not getting a terribly good return, from a bank account or traditional savings. Here's something that pays 7 or 8%. Is it a viable thing for somebody to invest in?
Yeah, well, absolutely. Well, there are two parts. Thanks. That's a very good question. Firstly, I say personally, I'm living proof because I've put a significant chunk of my savings across a various number of platforms. And anyone will tell you, diversify, spread your risk. And the attraction from lending is the Royal Bank doesn't take your risk. 1,000 people take a tiny bit of the risk. So that's a very attractive thing about peer-to-peer. But you're right, it's called peer-to-peer. If there are people in this room with savings not getting an earning, they could be invested in a Highlands and Islands enterprise and helping them grow. It's a very attractive thing. And one of the things that's emerging in the peer-to-peer market right now is the difference between institutional money coming into peer-to-peer lending and people staying, if you like, pure and true to the idea of, mum and dad savings backing small business. And you'll see that emerging. Obviously, I keep putting the areas that interest me because that's interests me is how the market's going to evolve. But right now, people could really back businesses they know. I mean, it turns out I've backed here, so we already have a connection. I backed his business on the market. This is nice. So I actually enjoy the process of looking at businesses and supporting them. You were asking me earlier, do I get a kick out of it? I do. But you have to go in your eyes open. You have to be aware. There's a danger of people saying it's just like another savings product. It isn't. There's a risk. You could lose your money. Most of the product companies have ways of protecting savers from defaults and loans. And again, if I said earlier, do your homework, look on the site. It's very easy to follow what's going on. The rates are vary between 6 and 8%. And when you take off their fees, they take a very small fee. You can make, I'll tell you, I'm making about, I think, gross 8.3% on my portfolio, 5.9 after debts and fees and risk. 6.
And how long,
That's 2.5 years I've been doing that.
on average, I mean, Rob, how long's your loan for?
It's a 3-year and it's non-equity based, so they're not looking for a stake in the business at all. It's a straight loan. As long as you continue with the monthly payments at the end of those 3 years, that's it.
And is there any issue about paying it off earlier?
There's no early redemption
Right.
at all in that. No, it can be paid off early if need be. There's no problem with that at all.
And a point here, I mean, Al, the bank, I don't think takes equity in things, in businesses any longer. I think that was one of the lessons probably of the financial crisis. But, Rob's just brought up about the equity bit, that someone taking a cut in a business. I mean, is that available as well, Andy, in terms of, not just lending and getting money back, but actually being able to invest in somebody's business and take a cut in it or a chunk of it?
Yes, there's probably even bigger marketplace in what's called equity funding or crowdfunding. I mean, we can have a whole chat about the different things, and in fact, we don't really want to do that today. But there is a large group of companies which will let ordinary what are called retail investors, i.e., not companies, not IFAs, take a stake in businesses. And the ones you might have heard of, Crowdcubes, Cedars. There's an Edinburgh-based one called Share In. Let's give a shout out to Scottish in companies. And they are a very different kettle of fish. You could lose all your money. In fact, you probably will lose all your money because most startups fail. So it's a quite different risk if you're on the saving side, the investing side, than lending money. Where the data is out there that default rates are below 1%. So you can afford, if you factor that into your lending, you can live with that. Whereas you might lose all your money on equity sides. There's plenty of information available. If anyone wants to ask me or put in questions, I can send out some information. But there's the UK Crowdfunding Association. There's the Peer-to-Peer Finance Association and Nesta. If you just put them into your favourite web search engine, you'll find those 3 are independent bodies that will give you loads of advice and lead you to these companies rather than try and do that now. If you're interested, that's a good way to start, or talk to people like Hamish. Does that answer your question?
No, that's absolutely fine. It's and again, I suppose, from the bank, I know it's probably not your area, but in terms of financial advice, do financial advisors within the bank that's now start to look at saying to people, look, balance your portfolio, you might want to look at this as something you want to invest in, or even if people in business have got some spare money to invest in schemes like a funding circle.
So one of the things we did look at was, could we help and support and set something up like that ourselves? It's not quite got off the ground yet. Could we help bring customers with funds together with businesses who wanted to borrow money? So I guess one of the things that as a bank we need to be careful is, and you talked about the advice piece. So our lending it's non-advice, So we make a valued judgment on whether a customer can repay that, and the customer says yes, I would like to take that. So from a financial, there are a number of aspects, I guess, that we're less evident in nowadays, and the financial advice part is one of those. It tends to be left to more, I guess, specific financial advisors out there to particularly around something that I guess that's almost as new and innovative as that type of investment, because the risk out there with that, I guess, is fairly high. So in a roundabout way, probably not an investment that we would be advising our customers on.
Okay. I mean, Rob, I'm conscious, that there's maybe some people who want to ask some questions, but, from a business perspective, Rob, have you any advice for somebody who's maybe thinking about this? What they should, what they should do? And you've taken bank funding, you've set up a business, you're very successful, you've expanded it, you've taken bank funding, and you've taken peer-to-peer lending.
Yep.
What would your advice be to another business person who's maybe faced with I want to expand, I need to get some money? What should they be looking at?
I still maintain the bank's your first port of call. They know the history of the business tangible in paper, and they can see that, so they'd be absolutely the first port of call. After that, there's so many other mechanisms out there you can look at to do that, but I'd certainly look at the crowdfunding side, and if the numbers fit and really work with your business, I'd certainly entertain that route, yeah.
Okay. Yourself, Andy, what's your thoughts on this? Should people, for example, get their accountants and lawyers involved in this?
Well, I said earlier, I think if you feel that way, you should. People have to know themselves. But personally, for me, I found it not a problem. My background is not finance or banking. My background is technology, and I found it, with a bit of work, I found it very rewarding and enjoyable to manage it myself. So I think it's perfectly possible for someone to do that. I'm with Rob. I think I had a chap came to the other day, and I ended up saying to him, "Go and try your bank." So it's not us versus the banks in this situation. There's not even an us in my case, but I think that there's room for both. However, one of the issues, and I think you touched on it earlier, is a slow no is a problem. If you go and consult the banks and spend months going through paperwork to find a no, that can really hurt you. So if the banks aren't going to give you a slow no, then talk to the banks. If not, I would go back to raise money for me, peer-to-peer in a heartbeat. Absolutely. The savings side is a different question, obviously, but from a borrower's point of view, as a small business, I would recommend it entirely. And again, because you can go and lurk, watch, learn, watch the market, see what happens. You don't have to go in with your eyes closed. So I'm probably more bullish than Rob. I would say definitely, especially if you had experience in the banks and it hasn't worked. I would ask why you're not doing it now. I mean, really, why aren't you? There's almost no risk in looking, having a conversation. It's going to be a phone call, not a 47-page document. Fair comment?
Fair comment.
Yeah. And Al, yourself, from the bank's perspective, how do you see it going forward? It's the comment there, not a 47-page application, and is that true? And also, I think you mentioned the 4 things at the beginning. If I was coming to you today for a loan, what would you expect me to be bringing in so that you could have a fair shot at it first?
I guess so. Hopefully not 47 pages. So we do recognise that as an organisation we have become, or we're overly enshrined in red tape. We became that way for reasons that are, that I guess everybody knows. Again, no point in refocusing on that. However, we do recognise, and the slow no bits is the worst in the world for anybody. So what we have to have is a streamlined process which allows people to have confidence that they will either get a yes very quickly or a no very quickly. In terms of what we would ask for, if you're coming in and you have a new business, then I guess we want to know about your business. So whether it's a full-blown business plan or whether it's simply a synopsis of what you're going to do, there does need to be some level of financial, whether it be historic financial accounts or whether it's projected financial accounts to support that. And in some ways the numbers are important, but it's the assumptions that sit behind that. The market research piece, forgive me, but my kind of bugbear is people who simply pull statistics from a PC that says there are 53 million people in the UK and 71% of them use toothbrushes or something. So I sat on the Scottish Edge initial judging panel for people to go through to the semi-finals, and there were entrepreneurs on that, and the biggest thing the entrepreneurs were saying, and this wasn't me saying it, was you've kind of got to do the hard yards. You've got to be out there, you've got to have market research, you've got to have hard facts, you've got to show you've done it. You've got to show that it's more than just a simple statistic coming out of somewhere. So that for me is kind of, you need a kind of business plan. You need some numbers, you need assumptions, but you need to kind of show that you've done your research, and that's the non-financial skin in the game piece, if you like.
Can I just come in? That's a very fair point. Even the sites like Funding Circle, we shouldn't just keep mentioning Funding Circle. There are many other very good lenders out there. I mean, there's Funding Night, Funding Crowd, there's Asset and Invoice Lending, there's Lending Crowd, another Edinburgh-based new company, so give a shout out to Scottish Peertopeer. They all have their criteria. For example, I think Funding Circle, it's 2 years trading, positive, no major county court judgments. So it's not a free lunch, and normal sanity still applies. But there are, if you have a more a startup idea, you might go to equity raising, funding capital, which the lender will take more risk, and you could get going. But it's not a free lunch, you know. I don't want to give that impression. And again, all the marketplaces will tell you their minimum criteria on the site, but it's much simpler. You asked earlier, it's a much simpler experience, much more transparent, much quicker, generally.
I think one thing I'm worried about is the 29% of people that don't use toothpaste. But
I don't know if that's a start.
there's a huge gap in the market.
I'm going to start.
Definite market opportunity.
Yeah.
We'll leave it there just now. Listen, gentlemen, thank you very much. Absolutely brilliant.